Good afternoon and welcome to the Street's Google Hangout on Cisco's earnings. Of course, Cisco is a tech bellwether and the market is clearly focused on their earnings. What is it going to mean for other tech companies? Well, they came in with 51 cents earnings per share. That's versus the expected 49 cents. The revenue came in at 12.2 billion. The market had expected 12.18, so it has been overall a positive reaction to the earnings. I'm joined by our managing editor, James Rogers. So, James, what did you think? What was your opinion? It seemed like it was a pretty good quarter.
Yeah, it was decent. You know, we've heard this story a lot from Cisco in the last few quarters. This is a company that had a lot of problems, say like 18 months, 2 years ago, and it seems to be really sort of evolving out of that stage in its history now. You know, slow but steady. That was one of the themes of the conference call that I listened to the first half of. You know, and as John Chambers said in his prepared remarks, you know, it's slow and it's basically Cisco is executing at a very high level in a slow but steady economic environment. So I think that's what it's all about. Like nothing too spectacular. There was a decent beat. You know, the guidance was pretty much in line. But I think like when you look into the numbers themselves, you can kind of see some quite interesting trends forming there.
Well, I would agree with you, James. One thing that really stuck out to me was a line item about taxes. They had a tax benefit that was substantial, and of course that affected their net income. Now, when you look at it, the company did have this tax benefit, and it was roughly $258 million for the 3 months ended. That is substantial. It was substantial for the 9 months. They're not going to be able to repeat that. And what struck me as interesting on this was that John Chambers, or rather their CFO, went on and on about this huge increase in net income. Well, they got there because of a tax benefit, you know, and they're not going to get that again next year.
And, you know, I'm glad that you mentioned that, Debra, because I'll be speaking to Frank Calderoni, the CFO, in about an hour's time. So I will be asking him about that as well. So, yeah, you know, you're right. It's good to pay attention to a lot of these numbers. For me, one of the interesting things in there is that, you know, we've seen in the last few years, Cisco has very much moved away from being this company that's renowned for selling sort of traditional networking gear, these switches and routers. It still sells them, but it's had a real push into other areas like software and services. And that's how it's going to evolve. You know, that's how it's going to generate a lot of recurring revenue moving forward. Now, at the start of the call, they talked a lot about how services revenue was up 7%. And on the face of it, that looks quite good. But then as the call progressed, you found out, well, you know, the business model for services actually CAGR of, I think it is, 9 to 11%. So services probably wasn't as strong as it could have been there. And, you know, they explained that there'd been a little bit of a lag from previous quarters where services, you know, maybe wasn't as high as they'd expected. And it seems like that's still continuing. And that's obviously going to be a key area of attention for John Chambers and Frank Calderoni moving forward.
Also, I noted that they mentioned that the budgets are really shifting to wireless from wireline. And, you know, they did make a lot of acquisitions this year, pushing more into that mobile space. They did announce that, you know, they're acquiring Ubiquitous, and that looks like that's going to take them into the 3G area. So clearly they're pushing into wireless. They see their business is going into wireless and that they are positioning themselves, you know, so that they can take advantage of this shift in the marketplace.
Well, there were quite a few positives there. The wireless revenue was up 27%, and the cloud data center revenue was up 77%. So, I mean, these are big numbers here. I mean, you know, they may not be like that impactful for the top line yet, but moving forward, I think they're going to be a bigger deal. And also, when you look at the sort of cloud data center revenue, you also have to look at Cisco's UCS. You know, it's Unified Computing System. This was its big push into the server market, which really ruffled a lot of feathers. It's a HP. So when HP brings its own numbers out later this month, maybe that's something we need to be looking at there. Like, is Cisco starting to really tread on its toes there?
Well, the market clearly liked what they saw in the after-hours trading. The stock jumped 4% immediately. Yeah. And then it seemed like when the guidance came out, they also were pleased that it wasn't a low guidance number, that, you know, coming in mid-range was acceptable. And then the stock was, you know, jumping up 5%, possibly getting up to 6%. You know, overall, over the past year, they kind of seem to have stalled out a little bit at that $22 mark. The average price target is around $24, according to Bloomberg. You know, but when you look at it long term, when you look at the 5-year chart, I think that you really see that the stock really has some room to move to kind of get back to, its previous highs above 25. So I think that, it's not a big stretch for these analysts to come in with a price target of, $24 to $26. So, I think that it is doable to see this stock, especially in this crazy bull market that we've got going on right now with tech starting to join into the rally. I don't think it's going to be too hard for Cisco to get back to those old levels.
Yeah, and I like you, I've seen a lot of those analyst numbers, there's targets around 25, 26, that type of thing. I think that's totally achievable. Investors need to understand that this isn't a crazy growth stock anymore. Like those days are behind Cisco, but it has morphed into something a bit different. Maybe it's more of a value play for investors. And some of the things from the call today, maybe sort of the broader economic picture, things in the US didn't look too bad for Cisco. We have kind of service provider revenue was up 10%, public sector revenue was up 5%. Now that's even within the backdrop of everything that we've been hearing about the sequester. So, and we're just wondering whether that might be a little bit of a positive for some of the other tech companies moving forward. I know we're coming to the end of this earnings cycle in tech, but maybe for the next few months, maybe that'll be something that we can look on as like, this will be giving the sector a lift.
Well, they are certainly making investors happy with the dividend. They increased the dividend quite a bit. James, I know that you are going to be talking to the CFO, so we're going to let you go. And we thank everyone that's joined us on this Google Hangout for Cisco's earnings. Stay tuned because I'm sure we will have more of them. That was James Rogers, our managing editor, and I'm Debra Borchardt with The Street.
Thank you.